morning, everybody. Welcome to our Moving Markets podcast. It is Tuesday, May the 20th, 2025. The U.S. stock market has been open now for just about 30 minutes. Start of the day, I'm going to tell you, not a lot different from yesterday, but different in the sense that there's not some kind of immediate recovery. The Dow opened to the downside, and so far it's kind of staying to the downside. Dow down a little over 80 right now, S&P down about 22, NASDAQ taking a little bit of bigger hit from a percentage standpoint, down about 115, 0.6%. So it's I think most traders, most investors right now are in a very wait and see type of a pattern. They want to see what kind of progress gets made with this reconciliation bill that is working its way through the House and then will go on to the Senate. I think people are watching to see what kind of a time frame there's going to be. Are the Republicans in the House of Representatives going to sort of get their act together and get this passed through the House of Representatives before the end of this week? A lot of hope that it gets done before Memorial Day. So the question will be, does that happen? Does that take place? And then the other thing is going to be how different is it going to be versus what the Senate wants to do, or is the Senate going to be able to take the bill that the House gets through and have an easy go of it? I'm less worried about the Senate, because even if you have senators like Murkowski and Collins and McConnell, even if you have them vote against this, it's not, you're still going to get it passed. You can have 3 defections in the Senate from the Republican side. And don't discount the outside possibility. I think it's incredibly slim, but don't discount the outside possibility that maybe someone like a Joe Fetterman, maybe he comes along and votes with Republicans. I seriously doubt that would happen. I think it's an outside possibility. We'll see. I wouldn't hold my breath for it in any way, shape, or form. But that's going to be, I think, the biggest focus of the remainder of this week. And it will tie hand in hand with what, if any, progress gets made on new trade deals. You could get a bump in the market on any given day this week from a new trade deal that is announced, something that is solidified, or a country that we haven't heard yet who is coming to the table to try and get a new deal put together, or get something solidified with the United States in terms of a new trade deal. But all eyes are going to be on the House of Representatives for today and tomorrow. And Donald Trump, the president, went to over to Capitol Hill today, down the street from the White House a little bit, to meet with Republicans to try and get them unified. The SALT tax provision is going to be, I think, one of the bigger sticking points, and then cuts to Medicare, I think, is going to be one of the other sticking points. It bothers me that there is the dishonest rhetoric that comes from one political party, implying that American citizens, they don't come right out and say this, they say Americans, and they avoid saying the word citizen, but they say Americans are going to lose their benefits. They're going to lose their Medicaid and their Medicare, and that's complete and total BS. What the Republicans want to do, those that want to see some deeper cuts to Medicare and Medicaid specifically, not so much Medicare, but Medicaid, the people that want to see cuts, they want to get rid of easy Medicaid access for able-bodied, healthy individuals between their mid-20s and their early 40s who are getting on Medicaid, and they're not even out trying to find a job. They're not trying to work and provide for themselves. And you could cut a lot of people off the Medicaid rolls if there was a work requirement. Apparently, most Republicans are in favor of a work requirement, but the initial bill that was going through the House wanted that work requirement to not kick in until 2029, which is just idiotic. That's stupid. Put the work requirement, I would want it starting today. I'd want to make it retroactive and go back to the beginning of the year and say, if you should have been working since January 1 and you're sitting around on your butt, not even trying to find a job, let's strip you of your Medicaid going back to the beginning of the year. Now, I'm an ornery person at times, and that's kind of my opinion. And I know that's unrealistic, but I think they've got to not mess around with that and try and get some of those cuts into effect right away. The SALT deduction is a tricky one because I know there are Republicans in states like New York, New Jersey, Connecticut, Rhode Island. I'm probably missing some, Massachusetts. I know there are places where the SALT deduction is a big deal, and you've got Republican congressmen and congresswomen who are worried about whether they can get, whether they can hold their seat the next time they're up for election if they don't more aggressively try and get those big SALT deductions in there. The problem is there are no senators from the states where the SALT deduction is a concern. And so I think the senators would just as soon see it not be in the bill at all. And you might even have some senators who would use that as a reason to defect. I could see Lisa Murkowski using that as a reason to defect from voting for the bill in the Senate if there's a big SALT deduction in there. I don't like the SALT deduction, but I have the luxury of not being in one of those states. I understand the people in those states love the SALT deduction because their state taxes are so high. My state taxes are not really high, and I don't like the fact that I pay more in federal taxes to give bigger deductions to people who are in states that pay higher state taxes. Have your state get their house in order. Quit electing people in your state that keep your state's taxes super high, and then you won't need my tax money to help with your SALT deduction. That's kind of my naive opinion on it, but it's going to be interesting. It's going to play the biggest role in what happens in the markets the rest of this week. So that that doesn't change at all from what I presented yesterday and what I talked about yesterday. So let's shift gears and talk about our spread trades. I hope it went out yesterday, maybe in time for you to get filled on the new trade on Home Depot, or not Home Depot, excuse me, the new trade on Coreweave. My Coreweave trade is in place. Coreweave is giving back a little bit today. I'm okay with that. Actually they're up a little bit now. They were down a little bit and now they're up a little bit. Just in the time I've been talking, they've moved into the plus column. That should be a good thing because that should have made it really easy for your trade to get filled. The fact that they were down just a little bit at the open, I think should have you in really good shape right now. I show that right now, I'm a little bit profitable, not a lot, but a little bit profitable. I got filled, and I'll put this into the spreadsheet. I got filled on Coreweave. In fact, I can do this really quickly. My fill prices on Coreweave got in at 1053 right here, and got in at 2153. I got in right at the $11 that we were going for. Now, I probably, if I refresh this right now, because this doesn't automatically refresh every couple of seconds, but if I refresh this right now, I think it'll show me profitable because I show my two open legs of the position profitable just a little bit. So I think this will show just a tiny bit of profit here. Walmart, very flat today. Walmart gave up a little bit yesterday, not very much, very flat today. And that means that with Walmart, we've got a little bit of work to do. We're going to, I will make this adjustment. I'll probably send this out during the day. I might even send it out while trading is going on during the day, but it'll be okay if it's something you want to add tomorrow morning. We will add a new short put into the equation. We're going to leave that short call that's there right now to hopefully expire at the end of this week at the 100 strike price. And then we'll add a short put so we start taking in more credit there. We're down a little bit on Walmart, but not a big worry on that. AMD down a little bit today, not too bad. Johnson & Johnson is up today, and it's finally getting the break to the upside that I've been wanting for so long and been disappointed that it's not getting. Now, the tough thing with Johnson & Johnson is during this entire stretch right here, it came so close to giving us technical crossovers several different times. It did give us the little head fake crossovers up and back a couple of times here. I don't know if this 3 days in a row of upward movement is going to get us a technical crossover on the RSI, the 5 and 20 day moving average. The MACD is on the verge of a crossover. So I don't know if it'll go up this high and then back off a little bit. With Johnson & Johnson, I would say the maximum that you could get for the open part of the trade, the maximum that you could get right now is the difference between this leg that is open and this leg that is open is going to be $2.50. It would be nice to get that entire $2.50 by getting all the way to the end of the week with J&J trading above 152.50. Right now, it is trading at 153.71. As of right now, the mid price is about 195 on closing out the spread. I would say if that mid price gets up to 225 or more, take it and exit the trade. It'll be much improved from where it was at previously, and you'll be glad to just be out of that. Nvidia and Palantir both down a little bit today. Not too bad, not horrible moves to the downside. I'm not overly worried about them. Nvidia has definitely given up a little bit, but is still in a really good profit position. Same with Palantir. So no changes to make on any of those. No changes to make on any of our collar trades. And with that, I think, and then for those that are the triple play trade members, I'm in all three trades. Home Depot had a nice strong move to the upside early in the day, gave up a little bit of that, and now it is back to the upside. Home Depot is trading right now higher than where we need it to be guaranteed profit at the end of this week. But what we need to hope for is that Home Depot will make a full break through this 385. If Home Depot breaks above 385, meaning by the end of the trading today, it finishes at or above 385, then I think 385 kind of becomes your new level of support, and it won't matter if it bounces a little bit in the next couple of days. It'll stay above 385, and we'll get out of our trade with our full target profit on that. We've got earnings coming out today on Snow, and I think tomorrow morning on PANW, or vice versa. I could be reversed on that. I think one of them reports today after the close, the other one tomorrow morning before the open. Those are our other two triple play trades. And then if you're still in the SMCI trade, the super micro trade, we're just that one's at the 38.36 strike price bull put spread. I'm not worried at all about that one reversing directions and going down. So I'm basically going to let that one expire at the end of this week, and that'll improve that trade from where it's at right now. Those are both going to end up being losing trades, but the loss is much, much less than what they were before we made a couple of adjustments on them. So we end up in pretty decent shape overall, and still at a very high rate of return so far on the year. All right, I'm going to wrap up right there. Have a great rest of your Tuesday. Watch for that probable adjustment to Walmart, either a little bit before the market closes or just after for tomorrow morning's open, and then we'll be pretty much set on everything else going through the rest of the week. Thanks, everyone. Bye-bye.